Okay, so this night we'll be talking about introduction to technical analysis. So this night we won't talk about much. What we'll be doing this night is just an introduction. So from tomorrow we go straight to price action, candlesticks, market structure, indicators, the oscillators, the MA, the Beacon, everything. From tomorrow we start looking into that. But for today, it's just an introduction into what technical analysis. I'm just trying to wait for others to join us so we can start off.
Okay.
Okay. So can you see my screen?
Yeah, I can hear.
Okay, right. So let's just wait like 2 minutes for others to join us. I don't know what's delaying there.
Okay.
Okay, so I'll be muting everyone. All right. So, yeah, okay. Basically, technical analysis is the bedrock of everything. To conquer any market, you need to have at least, even if it's just a baseline or basic understanding of technical analysis. Because everything that happens in the market, God, there is always a force behind every move. There's always a force behind every move that happens in the market, right? So technical analysis can what help you predict when maybe a major move, either upward or downward, is what approaching. Because if you can't hear me, just indicate in the share chat box. I'll check it out. So technical analysis will give you that insight as to what is going to happen during a particular time in the market. That's how important technical analysis is. You know, during the previous bull run, the shitcoin season, where a lot of coins were pumping and felt like TA or technical analysis was not really relevant. Yes, at that moment, what was driving the market was high new supply demand. That was what was pushing the market. So markets would easily break supply support and break resistance. But now the hype is dead. It's left for you to what analyze the market correctly and know what is going to happen. Before BTC fell from $54,000 to current price, some people already saw the move and it took cover. That's through technical analysis. So the whole logic is very, very simple, right? Technical analysis is a methodology for forecasting. It's a methodology for forecasting the direction of prices through the study of past market data, primarily price and volume. Right. Okay, give me a minute. Please, if you are joining yourself, joining the session, please just mute yourself. All right. So it's just like, okay, you open your chart, now you're looking at the candlesticks, the price charts, everything, patterns, everything. Now you need what happened, what has happened before to want to be able to predict what will happen tomorrow. Just like saying, once you know what has happened to you in the past, you can easily predict what can happen to you in the future. Like your actions and inactions yesterday, today determines what will happen to you tomorrow. Same is applicable to the markets too. So price pattern or chart patterns in the previous days, previous session, previous minutes, previous hours, previous seconds, what you can use it was to predict what will happen in the future, right? So what technical analysis is a methodology of using past market data to predict what will happen in the future. That's just a simple analogy. In Asia, technical analysis was developed by a former Monihisa during the 18th century, which evolved into the use of candlestick patterns. Monihisa, I think it was one that wrote the book Candlestick Bible. I think he was author of Candlestick Bible. So he was one of the earliest developers and one of the earliest people that discovered what the use of candlestick in what's trading the financial market. Mind you, this technical analysis does not apply only to what to people, forex, stocks, whatever market that has price charts. You can use technical analysis to conquer it. That's why I said technical analysis is the bedrock of all markets. Now, technical analysis employs tools such as charts. The chart could be used to interpret price patterns and trend in the market. Before you can carry out technical analysis on a particular, maybe a particular pair or a particular stock, you need the charts. You need to see candlesticks. You need to see what support. You need to see resistance. You need to see area where we have what supply and demand. You need to look at the volume. You need to look at a whole lot of metrics that are all embedded on the charts. So once you can put all of that into consideration, you can easily work, okay, yes, this is where this market is going to. Okay, you saw a market at support, or at a major support. Okay, yes, this is where this market is going to bounce from here. Or it's at a resistance, yes, this market is going to come down from here, or it's going to break out, or it's going to consolidate. So with that, with the metrics you can see on the chart and with the volume, you can easily predict maybe one impulsive move is coming or one retracement move or is going to happen. So some of the important metrics technical analysts look for in the charts, okay, we have head and shoulder, that's inverse head and shoulder pattern. When we start talking about chart patterns, I'll go deeper into that. We have double top and bottom. We'll go deeper into that later. Technical indicators, moving average, RSI, relative strength index. We have Bollinger, 20, RDX. Support and resistance, that's the bedrock of every technical analysis. Whether you are trading with trend line, you are trading with indicator, you are trading with horizontal line, whatever it is, you are still following the concept of what buying at support and selling at resistance. That's the bedrock of what any financial market, or selling at support and buying back at what at resistance, depending on the all right. So now we also have trend lines and we have flags, pennant, orb, and candle pattern, and many more. We go deeper into all of these later. So technical analysis analyze price, volume, psychology, money flow, and other market information to predict the next market movement. Okay, open your chart. Yes, this market is at a major support. It should bounce from here. Now the volume is low. Because to validate your analysis, okay, you've analyzed this market is going to go up, you need what the volume to increase. And how does the volume increase? When money flows into the market, it increases the volume and price goes up. And when money flows out of the market, it increases the volume too, and price go down. Either way, volume and cash flow in the market is very important. And I also want you to understand this fact that the market is people like you and I that make up the market. As I'm buying, someone else is buying, someone else is selling. That is how it is in the market. It's not like one abstract thing. It is people like you and I that are behind the screen of the laptop, trading, buying and selling, placing orders and doing everything. Right? That's why when you open your chart, you will see some patterns that repeat themselves consecutively. I'm coming to that very soon because investors, they tend to repeat a particular cycle over and over again. Why do people have to buy at support and sell at resistance? Sell at resistance, buy back at support. You see that pattern, it goes, okay, hold on. You see that pattern, it goes like this, bounce from support to resistance, from resistance back to support, and it keeps repeating that because investors will buy at support, sell at resistance, buy back at support, sell at resistance. They keep doing that until there's a breakout of that region. So it is the attitude of investors in the market, their psychology, their sentiment of investors in the market that decide where the trend is going to head to, or whether we are going to consolidate. So a technical analyst looks at past price history or chart patterns of a particular asset or security to predict future price movement of an asset. I talked about this already. So it has been believed that price tends to repeat a particular cycle due to collective and pattern behavior of investors. I just said this. Why do investors have to buy at support and sell at resistance? Sell at support, buy back at resistance, buy at support again, sell at resistance. So that pattern behavior of investors tend to what? Bring out that ranging market structure where you see price bouncing from support to resistance, support to resistance. So that's what I'm trying to explain to you, that it is what people like you and I, and it's our attitude in the market that what determines where the price tends to. It's not abstract. So technical analysis is not limited to analyzing price charts and chart patterns. Some analysts carry out survey to monitor investor sentiment. Like when I was reading up this thing on the internet, I was so impressed about what I found out here. So the survey gauges that, sorry, I can't see without my glasses, sorry. The attitude of market participants, specifically when they are bullish or bearish. For example, a survey that shows an extreme bullishness are most of the time an evidence that the market direction in this context, which is in an uptrend, might reverse. Now, take for instance, we all bought this particular coin. Let's say we all bought this coin XYZ. We are all in this coin XYZ. Everybody in this group has bought. Now we are all shouting to the moon, to the moon, to the moon, to the moon. Now, we that bought that coin, the only thing we are waiting for now is for this coin to pump and sell. Majority of us already bought it, and majority of us want to sell it. So in this instance, we have more sellers than buyers, and we need more buyers to pump the market. And if there's more sellers than buyers in the market, the price will definitely come down. That's why there's a saying that goes with buy when there's no hype, sell when there's hype. Because when the hype starts coming, that means many people have bought it already and are waiting to sell. So when everybody in the market is bullish, yes, this one is going to $1 million, it's going to $1,000 million. You know that at that point, you start taking profits. Because at that point, we have more sellers than buyers. We have more people that are willing to dump that market than people that are willing to pump that market. Now, on the reverse, now this asset has been falling. Everybody has been shouting, man, this coin is shit. It has been dumping for long. In this instance, if you buy into this project, now at that moment that everyone is bearish because we have more sellers than buyers then. Everyone is shouting, wow, this price has been going down. It's a useless project. And you know this project has a real, that's a real life use case. Hold on. And you know this project has a real life use case. All you need, okay, I have the chart. Hold on. I'm not talking to myself. So. Can everyone hear me? Can everyone hear me? Please indicate in the chat box. Okay, you can hear me. All right, let's continue. So now, on the contrary, now when everyone is bearish, at that moment, it's that there are more sellers than buyers. There are more people that want to dump their market. There are more people that want to pump their market. There are people that want to dump it. So at that moment, once you start buying, right? Now when the price starts coming up, when the dream starts coming, those that have been selling, they will start to form back in, they will pump the market for you, and you exit, and the market will most likely dump on this set of people again. That's why that market is simple. You buy the pump, you sell the dump. You buy, or it's that you buy the pump or sell the dump, or you buy the dump and sell the pump. And you can buy the pump too and sell the one's pump. That's if you are very smart. So you should want to understand this concept that once everyone is suddenly bullish on a particular project or a particular coin or asset, start taking profit. And once everyone is bearish and that this asset has real life use case and this asset is going places, that time you start buying. Because once the price starts coming up, those that are shouting that the market is bearish, you want to start what buying into it and it comes the market for you. So buy when the hype is low, sell when the hype is what up. Okay, let's continue. All right. So the logic here is if most investors are bullish, they have already bought the asset, like I said, in expectation of selling at a higher price. Meaning we have more potential sellers than buyers. I already said it. This strategy is called contrarian investing. Contrarian investing is a strategy characterized by purchasing and selling in contrast to the prevailing sentiment of investors in the market. When people are bullish, you as an investor you are bearish. When people are bearish, you as an investor you are bullish. That's the whole concept of a contrarian investor. All right. So this is the last slide for tonight. So a contrarian investor is bullish when large percentage of investors are bearish and bearish when a large percentage of investors are bullish. Take for instance, there was a time we were trading TLM on the group and TLM pumped to about 0.7 or 0.8 like that. Right? And others were shouting, okay, I want this to be go to like $1, $2, $3. At that moment, my instinct was already telling me that this project is going to come down. I took profit, and from there it jumped from 0.7 or 0.8 to currently at 0.13. It's not like the project does not have real life use case, it's just like what investors took profit. Those that bought when it was still low, took profit at the top and the price was dumped. So when everybody is suddenly bullish in the market, start thinking of taking profit, and once everyone is suddenly bearish on a good asset, you should think of buying. Right. So this will be the end of tonight's session. Tomorrow we'll be talking about introduction to price action trading. This is what we're talking about tomorrow. Yeah, we have. I think I'm not done with the slides yet, but currently I have over 40 slides now. So we'll be going deep into what price action trading tomorrow. So now, please, before the meeting ends, please, I want to accommodate question. Please drop the question in the chat box. Just 5 minutes for question. 5 minutes for question, please. And I also have an assignment for you guys. I want you guys to go and make your own research on price action, the concept of price action, what you understand by what price action trading. Go make your own research and know one or two things about price action trading before we start tomorrow's session. All right. If there's no question. Okay, you don't understand the concept of contrary investor. Okay, let me go back to it. What I'm trying to say is, okay, now we all bought BTC. Now that market is down, everywhere is red. People are saying, let's say people are saying BTC is calm. BTC is going down. It's going down the train. And we both know that BTC is a good asset, good use case and massive adoption. Now, we bought it maybe at $5,000. Right now, BTC pumps to maybe $40,000. Those that are shouting at BTC is bearish, they start to form back in. We pump the price for us. Let's say BTC now pumps to about $50,000. Now, you have some people say, oh, BTC is going to $1 million. BTC is going to $500,000. BTC is going to $2 million. At that moment, those people that are shouting have probably bought BTC and are waiting to sell the pump. And when we have more sellers than buyers in the market, they will dump the price. So at that moment, when everybody is already shouting to the moon, to the mass, to the whatever, you start thinking of taking profit. That's the concept of a contrarian investor. A contrarian investor is bearish when everyone is bullish and bullish when everyone is bearish. Contrary, just like is opposite of whatever what the sentiment is between investors in the markets. To me, I hope you understand now. You understand now? Oh, good. So if that's all for this night, I'll be ending the session. The recorded video will drop on the group before 9 o'clock. Before 9 p.m., I'll drop the recorded session on the group. So thank you very much. Tomorrow we'll be talking about price action, and make sure you make your research about price action trading. So thank you very much. Good night. Yeah, I think someone asked question. I saw question. It's not, do you still have question? Waiting on you. Okay, what's your question? I'm waiting. Oh, you mean this presentation? I can't promise you get the presentation, but the recorded session will be made available to everyone. I will make the recorded session available to everyone, but the soft copy, I don't think I can give it out. But let's, before we end the session, I'm change my mind. Right. So thank you guys. Good night, everybody. See you guys tomorrow. Bye.